Good morning. It's Thursday, October 30th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So 6 straight days of selling in gold and silver ETFs. The focus really now turns to the December Fed meeting. Markets are moving cautiously after the Fed suggested that a December rate cut wasn't a sure thing here, and traders are digesting some of those big tech earnings and also analyze some of the capex spending. So the S&P 500 just slightly down about 5 points at 69.17. You do have the Nasdaq down 25 at 26,236. The Russell 2000 up about 1.5 at 24.95. You look at the gold market down about $6.50 here, trading just below that 4,000 mark. The range in the overnight session 39.25 on up to about 4,025. The 4,025 was about an hour and a half ago. So the market here sticking within that average true range. And if we look at that right now to see kind of where we're at on the gold market, it's right around $113. So based on overnight price action here, we're seeing that average true range start to compress. So some of the volatility, although it seems quite volatile on the surface, is starting to come out of that market here as it consolidates and it looks to gear up here for another potential run higher if you do get the yield starting to come down in the dollar index as well. You have silver futures just consolidating sideways and really trapped below that 45.50 is your key level of support, 49.90 is your key level of resistance. I believe that the market will attempt to build a base and a support, and we should start to see another movement higher. It really comes on the heels if we see 10-year treasury yields start to come off. The dollar index playing little role here as the correlation between the dollar and some of these key commodities here has become positively correlated just recently. You did have that meeting between Xi Jinping and Donald Trump already occur, and soybean futures down about 1.6%, sitting back at 10.76 and breaking below that $11 mark here. So you look at a lot of the grains red across the screen here. You look at the energy space red across the screen there, and also in the cryptocurrencies. So call it a sea of red here today. Now the equities, they will remain in focus with another wave of results due on nearly half the S&P 500 already reporting. You look at the dollar index unchanged on the day, and you look at the 10-year treasury yields. Well, they have risen here back on up to about 4.07%, and it's your highest level since October 13. You look at the VIX futures down 33. It's at 1856, below that key level of 20, and the volatility in the gold market here at 2470, but it's below the 30 level, remaining slightly elevated here as you do get this post-mortem here with the Fed meeting concluding. So you go to Europe and Asia, those European stocks, they fell after a slate of earnings as investors look ahead of that interest rate decision here, and they look at the ECB with them coming out with their interest rate decision. So we should see some volatility in the currency markets. The Asian stocks turned slightly lower after Trump and Xi had concluded that meeting here, but they have seen a potential way for paving a trade deal between the two largest economies. So the MSCI Asia Pacific Index, it erased its earlier gain, and it came off here about 0.5%. Now we look at the earnings of the 248 S&P 500 companies that have reported so far. 81% have beat those analyst forecasts, only 15% have missed. So where the volatility really came in that gold market yesterday was that Powell said that there is no risk-free path for policy. He said that the rate cut in December is far from a foregone conclusion. That's where the gold market really got rocked to the downside and didn't like that at all. Then he came out with his Q&A and he said, but overall, in line with our expectation, there's no reason to deviate from the plan given the lack of data and the elevated risks from the shutdown. So gold snaps back on that. We get a bit of reprieve, and then what happens is the ETFs, they dump another wave of gold here into the close, and that's where you get that volatility back and forth. Now you look at the CME's Fed Watch tool. What we'll do is we'll start to look at the December meeting and what's going on there. You got a 70% chance of a 25 basis point interest rate cut, a 30% chance of unchanged. We saw Treasury futures decline after really Fed chairman, he casted a doubt on whether policymakers would deliver that third straight cut in December. The probability of the move fell back down to about 70%. My intuition is that you're going to see yields, they most likely are going to peak here again and start to creep lower. Gold futures, in my opinion, should start to rise again. U.S. equities should start to rise again. The dollar index, it's going to be a mixed bag there, but we could see the dollar index start to go up in conjunction with falling yields because of the fact that Europe and many of these other foreign currencies that are largely a component of that inverse basket in the dollar should start to taper off. Now, the bean market may have put in its peak on the buy the rumor, sell the news. The oil market most likely bounced to its lower high on the chart at that $62. And even with a lot of the bullish momentum, the bullish EIA data coming out here, it's going to be tough for that market, the oil market, to continue to travel in any kind of path higher. Again, the ranges on the silver market that I'm watching, 45.50, kind of coincides, and something to observe are the moving averages, like the 50-day moving averages. They're not actionable, but you'll see that that 45.50 and the 50-day moving average, they start to coincide with one another. The key level you want to see this thing get above is really like 48.50, 48.60. You get above there, silver should be able to threaten that 49.90, and then if you get above there, we'll probe above $50 most likely. Getting above there, it'll capture the bullish momentum. Traders will most likely chase that market higher. You look at the gold market, it's 41.31 is that level on the upside, where a break above that could potentially have another run back on up to all-time highs. The best looking metal out there as far as checks a lot of the boxes as far as volatility, trend, higher lows on the chart, higher highs, and you could start your charting on that copper market post that 25% sell-off that we saw. And you could see that since those August lows, copper futures have done nothing but kind of cycle and wave higher on the charts. The average should range about 13.25 cents, which if we did have a setback in that market, which would still put it above that psychological $5 mark. So there's a lot of good markets out there. When you get past some of these volatility events, that's when you could come back in and really start to position well in a lot of different markets. So I'll be looking at Treasury yields backing back off, potentially 10-year futures rising back up, U.S. equities on any kind of dip. I think that will be met with some strength. Bitcoin honing in on some of the key support levels, breaking through the 113, but 110, 108, those are really your key levels there. Seeing a lot of people do 3-month risk reversals on long positions. So they're long Bitcoin. They'll buy a put option at the 108 and they'll sell a call option here again. So it's a covered call with a protective put. That's called a risk reversal. Now, if you look at the ETF flows, yes, 6 straight days here on gold and silver. Gold up 17%. That's the percentage change. So still well in double digits here. They only cut about 167,000 troy ounces, longest losing streak since April 30th. You go to the silver market, they are really exiting that market quite aggressively here in some of the selling. So 4.5 million ounces of silver was sold in the holdings in the previous session, but we still have this year's net purchases at about 98.4. So 14% change here on percentage growth in that silver market. And I believe that that's where, once this selling abates and they start to go back into purchases, that's where you could see these metals start to ramp up again. So call me a bull on the precious metals. And if you know me personally, I've got no relationship with any of these commodities whatsoever. So if you have any questions, shoot an email to info@bluelionfutures.com. And remember that futures and option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.